Cruise companies are struggling right now. Can Royal Caribbean pull out a save? I'll show you what the chart says. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a bear flag on the Royal Caribbean Group. We've only got a few active trades right now, but we're going to take a look at those next, and then later on today's trading maxim. Monday, can't trust that day. Hey, that'd make a great song, wouldn't it? Remember to click the subscribe button and hit the bell so you don't miss any of these great trade setups. Let's take a look at our active trades. The Euro New Zealand's been moving up kind of nicely for the last couple of days. I trailed the stop up just a little bit with the PSAR to 177.44 to lock in 289 pips. Palladium is still consolidating right here into a nice triangle. My stop is still locked in here at 2061.30 to lock in 68.59. Waiting for this PSAR to move up above there to lock it in further. And lastly, the Euro Japanese yen paused a bit on Friday with this little pullback, but had a nice bullish close with this long wick. Remember, wicks represent price rejection, so I can see this one making a new high this week. As usual, we're waiting for the PSAR to track up here above the break-even stop to start trailing the stops. And that's it for the active trades today. Let's take a look at today's trade pick. We've looked at the Royal Caribbean Group before. Most of these cruise companies have had a tough time with the pandemic, but Royal Caribbean has managed to move up fairly steadily since mid-March. This is just a temporary situation, in my opinion. What with the uncertainty of government regulations on COVID, I think these groups are in for more bad times, and the chart seems to agree with that opinion. Just to be sure we're on the same page, a bear flag consists of an incoming downtrend, like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We will sell a daily candle close below the bear flag. To enter a full-size position, we want to see this volume bar reach up to this volume average. If it doesn't quite reach the average, but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume here, and dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So let's say this breaks down to here, and we get a close here just ahead of the close, say 15 minutes or so. Put in your sell order, and look down here at the ATR, multiply that by 1.5, and then measure that distance above the entry for your stop loss, and measure 1 ATR below the entry for your first target. If after entering the trade we get a close back inside the bear flag, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. That's today's setup on RCL, the Royal Caribbean Group. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. Tim's trading maxim number 66. The chief cause of unhappiness is trading what you want most for what you want at the moment. And this quote comes probably from Zig Ziglar. Those of you who are approaching my age are probably familiar with Zig Ziglar. He was an American author, salesman, and motivational speaker who passed in 2012. I was inspired by his stuff quite a bit back in the 70s and the 80s. I wish I put more of it into practice back then. I can't confirm 100% that this is his quote, but it is definitely consistent with his teachings. I believe this speaks for itself, but I'll say this. Take advice from an old guy and learn how to put off the things you want in the moment and focus on your long-term plans. Do you really need that $60,000 car right now? Maybe a $10,000 car will suffice for now, and later you can buy 10 of whatever it is you want and give 9 of them away. And I believe you'll appreciate the satisfaction and happiness that comes from doing that. Remember our Royal Caribbean trade plan for today. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Also remember to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I post about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. Best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Be sure you don't miss the next installment of the Trading Education series on Wednesday, when we'll continue to discuss the MetaTrader trading platform. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week, and I'll see you on Wednesday.